Welcome to the show. Today, we're introducing Spiritual Management LLC, a lower middle market M&A and capital advisory firm built for privately held small and mid-sized businesses. If you're a founder thinking about selling, raising growth capital, bringing in an investor, or even just trying to understand what your company is worth, this episode is for you.
And if you're on the other side of the table, an investor or buyer looking for deal flow, we'll talk about how a relationship-driven advisory platform can surface opportunities that aren't always blasted across public listings.
Let's start simple. What is Spiritual Management LLC in plain English? It's an advisory firm that helps owners and operators navigate big financial moments, selling a business, buying a business, recapitalizing or raising debt and equity, typically in the $1 million to $100 million range, whether that's enterprise value or the size of a capital raise.
That deal size matters because it's the zone where many companies are too big for friend and family financing and too small to get the same attention as billion-dollar transactions. Owners in this range often feel stuck. They've built something real, but the next step requires specialized execution.
Exactly. And this is where we should talk about the why. The need spiritual management fulfills is effective and efficient SMB M&A and capital raising. Not theory, not vague networking. Real process. Defining the goal, preparing the story, finding the right counterparties, and keeping the transaction moving.
Let's break down who they work with. The first group is business owners seeking exits or partial liquidity. That could mean a full sale, or it could mean taking some chips off the table while staying on to run the company.
Second group, companies looking for debt or equity. Maybe you need capital for acquisition, equipment, expansion into a new market, inventory, hiring, or to stabilize the balance sheet with a recapitalization.
Third, founder-led businesses getting ready for growth or future acquisition. Sometimes the right move is not sell now, but get your house in order, tighten reporting, clarify strategy, and position the company so that when you do go to market, you get premium interest.
And fourth, buyers and investors hunting for proprietary deal flow. Opportunities that come through relationships and targeted outreach rather than broad auctions.
Now the name Spiritual Management may catch people's attention. The firm emphasizes alignment between values and financial success, this idea that you don't have to abandon your principles to pursue a strong outcome. For a lot of owners, that's not fluffy. It's practical. Because culture, employee impact, customer ethics, and legacy all show up in what kind of buyer you're willing to choose.
Right. The best deals aren't just the highest price. They're the best overall fit for risk, certainty, timing, and what happens after close. Which leads to the question, what does the firm actually do day to day?
Their core services sit in three main lanes. Lane 1 is sell-side M&A advisory, helping an owner take their business to market, run a process, negotiate terms, and get to a closing.
Lane 2 is buy-side advisory, supporting buyers who want to identify targets, source opportunities, and pursue acquisitions with disciplined approach.
And Lane 3 is capital raise advisory. That includes debt capital, equity capital, or a combination. Basically designing the right capital strategy and then going out to source it.
And beneath those lanes are very specific deliverables that make or break outcomes. Valuation support, deal packaging and marketing, investor introductions, transaction coordination, and strategic partner referrals.
Let's unpack deal packaging for listeners who haven't been through this. Packaging is taking a messy, real-world business, mixed financials, founder knowledge living in someone's head, customer concentration, all of it, and turning that into a clear, credible investment case.
In other words, here's what the business is, how it makes money, why it's durable, what the risks are, and how a buyer or investor can win with it. In the lower middle market, clarity is currency.
Now, spiritual management describes itself as relationship-driven, but also process-driven. That combo is important. Relationship-driven without process becomes random networking. Process-driven without relationships can feel automated and shallow. They're trying to blend both.
So what does that platform look like? A few pillars. One is investor databases plus direct investor outreach, meaning actively contacting strategic and financial investors rather than waiting for inbound interest.
Another pillar is broker and referral partner relationships. In this space, Referrals matter. Not all deals live online. Many happen through introductions among CPAs, attorneys, consultants, operators, and other advisors.
They also use digital lead generation. That's basically a modern version of business development, creating visibility and inbound interest so founders and investors can find them, not just the other way around.
And then there are the operational tools. Standardized deal marketing materials, virtual data rooms, and CRM-driven pipeline management.
Let's pause on virtual data rooms. For an owner, the data room is where due diligence lives. Financial statements, tax returns, customer lists, contracts, HR documents, insurance, legal, IP, the whole story. A well-organized data room can reduce buyer friction and speed up the timeline.
And CRM-driven pipeline management might sound corporate, but it's critical. When you're contacting investors or buyers, tracking who has seen what, who signed an NDA, who asked questions, who is serious, without a system, things fall through the cracks.
Okay, so let's talk about the process, because most SMB owners aren't asking for a random introduction. They're asking for an outcome. How does a typical engagement flow?
Usually it starts with clarity. What are you trying to achieve? Full sale, majority recap, minority investment, growth debt, acquisition financing, or something else? And what does success look like? Price, speed, certainty, staying involved, protecting employees, keeping the brand, all of that.
Then comes preparation. Pulling financials together, normalizing the story, thinking through risk factors, and building marketing materials that make sense to sophisticated counterparties.
After that is outreach and deal sourcing. On a sell-side process, that means identifying strategic buyers and financial sponsors who actually fit the business. On a capital raise, it means targeting lenders and equity sources that match the company's profile and the capital stack that makes sense.
Then you get into management meetings, Q&A, indications of interest, and term sheets. And here's where transaction coordination matters, keeping the cadence, managing expectations, and preventing the deal from dying a slow death due to delays or confusion.
Finally, diligence and close. That's the marathon. Buyers verify everything, docs get negotiated, financing gets finalized, and a lot can change quickly. An advisor's value is often highest right there, when pressure rises and decisions get complicated.
Now, what does all of this mean for SMBs as a group, not just one company at a time? It means access. Access to capital markets that can feel closed, access to buyers who might pay more because they see strategic value, access to process discipline that reduces risk.
It also means that entrepreneurs have more options than bootstrap forever or sell to the first person who asks. A recap could let a founder de-risk personally while funding growth. A capital raise could accelerate expansion without losing control. A strategic sale could protect the legacy while maximizing value.
And for buyers and investors, it can mean a steadier stream of curated opportunities where the story is organized, the materials are consistent, and the relationship is warm enough to have real conversations early.
Let's address a common misconception. Some owners think M&A advisors only show up when you're already ready to sell. But in practice, starting earlier can change everything. Even 12 months of cleanup, better reporting, tighter KPIs, reducing customer concentration, documenting processes, can materially improve valuation and buyer confidence.
Which bridges into another service Spiritual Management highlights. CFO support, including fractional CFO work around capital raises, mergers, acquisitions, and exits. Because strong financial leadership isn't just about bookkeeping. It's about forecasting, storytelling, and decision-making under scrutiny.
So if you're listening and wondering whether you're ready, here are a few quick self-check questions. Do you know what your company is worth and why? Do you have clean financials that a third party can understand quickly? Can you explain your growth plan in a way that a lender or investor would believe? And do you know what kind of partner you actually want?
And if the answer to any of that is not really, that's not a failure. That's normal. The more important question is, do you want to keep guessing or do you want a structured path to a decision?
For anyone interested in learning more about Spiritual Management LLC, the firm is based in Albuquerque, New Mexico, and works across lower middle market deals. Their website is spiritualmanagement.org, and the positioning is clear, helping businesses and investors find alignment between values and financial outcomes.
That's it for today's introduction episode. What they do, who they serve, and how the system works. If you're a founder considering a sale, a recap, or a raise, or if you're an investor seeking proprietary deal flow, this is the kind of platform designed to meet you where you are and move you forward.
And if you take one thing away, let it be this: big transactions don't have to be chaotic. With the right preparation, the right story, and the right outreach, you can create options, and options are what give you leverage.